Hello, welcome everybody to session number 6 on day 1 of the Modern Investor Summit. In the words of Kojo Funds, hello, it's me again, Carl Hazley, VP of Content here at Finimize, and for this session I'm joined by 2 expert guests, Daniel Skoronsky, CRO at Admirals, and Liza Landsman, CEO at Stash. Now, as CRO at Admirals, Daniel oversees all sales, client service, and partnership directions within the organization. And as CEO of Stash, Liza brings an extensive experience scaling world-class organizations in consumer, finance, e-commerce, and retail, and brings that all to Stash. Liza, Daniel, thank you both for joining us. How are you doing today?
Thanks, Carl. Great to be here.
Yeah, very good. Thank you.
Awesome. So before we dive in, just some quick housekeeping for everybody listening and watching. Firstly, I want to say a massive thank you to our summit session partner, Admirals. Admirals Group was founded in 2001, and their history charts a clear path of growth and innovation. Today, Admirals serves clients in 130 countries around the world, and over the past 20 years, Admirals has become an industry leader among foreign exchange and CFD brokerages, offering a choice of over 8,000 instruments, including the most traded currency pairs, indices, and commodities. Second point, now, if you haven't already, please introduce yourself in the chat. Let us know where in the world you are and say hi to the other Finimizers. And third, just in terms of structure here, this is a 15-minute panel discussion with Liza, Daniel, and myself. And then we're going to open up to 15 minutes of Q&A from you guys. So please don't forget to ask your questions in the chat box and we will put them to our panelists. That's enough from me. Let's dive in with the first question. So Liza, Daniel, we've obviously seen the rapid democratization of access to financial markets for investors, particularly those early in their journey. And there's a lot of competition in the space. It'd be great maybe just to level set everyone watching here today to hear a little bit about how you've approached this opportunity set and how you go about differentiating your platform from peers. Liza, maybe we'll start with you.
Sure. Well, first of all, although it may be rude to do on the first question, I'm not sure I accept the premise of total democratization of access to early investors. I think there's been dramatic progress on that front, but I actually think true access is still, at least in the US where Stash operates, more available to mass affluent customers and less accessible for low and middle income consumers because of the pricing and frankly, the structure of a lot of those businesses. But where that does exist, whether it's through platforms like ours here at Stash or others in the space, I think the things that have really been key differentiators for us are our business model being a subscription, which gives us wild alignment with the consumer, and several of the structural guardrails we put in place connected with content that truly makes it a hospitable place for consumers early in their investment journey to learn and grow as they become more confident as investors.
Got you. That's really helpful. Daniel, how do you see the space?
And actually, I kind of agree with Liza. I agree with Liza on the part about the democratization. Look, a little bit different because we're a global company. We're not based in the United States, just for all you Americans out there, although I am American, so hello. But we're mainly predominantly in Europe, UK, and across the European Union. We also have offices all around the globe, as Carl had mentioned. But to kind of play on Liza's words, because we're a global company, we see countries that are still struggling to gain access to investment products. There's a lot of new technology like fractional shares and things like this that are starting to open up some of these third world countries where people don't have a lot of money or can't buy one full share of a stock, but it still gives them an opportunity to invest. So things are looking brighter and things are moving forward for that low income set or those third world countries in our case. But Admirals is definitely out there. We're promoting stocks, we're promoting the fractional shares. We're providing a digital transition where we can embrace new fintech solutions, whether it's through AI-driven models that can reach a wide variety of customers. But the one biggest challenge I think that we have is, because we're global, we have to think local, and we're dealing with a multitude of different types of languages, cultures, and different user experience. And so user experience is probably our number one goal in trying to make sure that we give the best customer service and user experience no matter where you are in the globe.
So maybe to pick up on a couple of those points, and Liza, if I come back to your point on democratization, I guess with a lot of new entrants in the space, in the investing space in the US, offering zero commission investing, trading, what have you, and some of the incumbents, at least on the online side of things, going to zero commission. I guess from an outside US perspective, it seems like pricing is maybe less of a barrier than it once was. So I guess I'm wondering, what do you think is missing in that pricing debate? And then Dan, just to put something on your radar, I guess, what is it that's catalyzing those third world countries, as you mentioned, to start to take the steps to investing? Is it purely the technological change, or are there other sort of macro factors like cost of data, tech infrastructure? And by tech, I mean, I guess, mobile technology infrastructure and so on. But Liza, to start with you, maybe.
Sure. So I would say a couple of things. One, I think there's actually a lot more to being a successful investor than trading. And I think the sort of race to the bottom on fees for trading, which, by the way, in general, I think is healthy, because it again helps align incentives, but has created this notion that high volume of trading is actually what achieves successful outcomes, when in fact just the opposite is true. And so I'm not sure that is the place where I would look, especially for consumers who are price sensitive. Often the zero fee on trading is just a veneer, because there are lots of other hidden fees embedded in these platforms, whether it's for transfers in or other services or access to managed portfolios or other products. Think about the zero fee trading almost as a loss leader for many of these platforms. So I think that's an important sort of awareness for consumers to have. I would say as they kind of think about what are the benefits of different platforms, it's really around understanding what's their total cost, in my view, like total cost of ownership. Like if I was going to engage fully in the platform, what would that really cost me? Yeah. But I would also say it's important for them to realize that active trading is a very small part of what actually creates sustainable economic security, and making sure you're engaging with a platform that helps you become educated and understand that part of the journey is really, really important.
Completely agree. Glad you've said that, and hopefully we can clip that up and use it elsewhere, because I think this year that's certainly been more part of the discourse. But I think if I rewind a couple of years, it was all about trading and not about investing, and the two were being conflated.
In a world where the market only seemed to be going up forever and ever, it's a natural conflation.
Yeah. And Daniel, maybe coming on to you about what's catalyzing access in those smaller markets.
Yeah, so let's be clear. When I think of the smaller markets or the developing countries, I guess would be the better word to say. I'm looking at South America, Southeast Asia, maybe Central Asia, Africa. And so what I'll do is I'll pull Africa as an example, right? So we've known for a long time, when the invention of the smartphone, and I'm talking about the handheld flip phone with the regular, just the dials, right? Just after our landline. Africa had these mainly because the infrastructure wasn't there for landlines, for telephones. So Africa was actually quite advanced from the regular pocket phone. However, it wasn't a smartphone. And only till really the last few years has that now kind of changing over to this smartphone technology, where also the investment apps, the investment opportunities, the ability to open up with a broker in a much more simpler, easier way, is now allowing access through that technology in some of these third world countries. So Africa is a really good example where technology, I believe, has kind of driven that access. When you look at something like South America, for example, to me, it's more about the internet. Brazil is a huge market, huge opportunity, lots of traveling around the world. So people are becoming more aware of types of products and investments. And I think even Liza said, as the markets are just going straight up, right? People want to jump on board, right? Everybody hears about it. It doesn't matter whether you're a beginner investor or a regular investor. People want to get access. And so through this technology, both from a access point of view, as well as a development of allowing these markets to be in the palm of your hand now, rather than on an expensive computer or expensive terminal or something like this has really changed the playing field.
Fantastic. That's really great insight there. So maybe shifting gears a little bit and thinking about taking customers on that journey, especially early in their journey. Like, what does that journey look like, going from zero to invested? And what are the sort of products people begin their investing journey with, and how does that change over time? Daniel, maybe starting with you.
Yeah, actually, it's a great question, and I think I'm gonna answer it instead of a typical answer. I'll answer it in a story. Might be more interesting. So, a couple of years ago, my son, he plays ice hockey. He's young. He was 9 years old, and his hockey coach is 25 years old. And he comes up to me and he says, "Hey Dan, I see that you're in the investment space and you're in brokerage and all this. Can you give me some advice on investing? I don't have a lot of money." I think he had like a couple €100 to invest. And he said, "Can you give me some advice?" And I thought, wow, this is really interesting. This young kid is coming up to me looking, for advice. And I said, you know what? I'll tell you what, pick five items that you want to invest in. And then come back to me and let me see what you've picked. I want to see what you know. I want to see what your thought process is. And he came back to me a few days later and he says, "Okay, I got my 5 items." And I said, "Okay, well, what are they?" And he basically, I thought he was going to say like Netflix or Tesla or Facebook's, some of the FANG stocks, or maybe even something blue chip like a Disney or something. And what he ended up saying was really surprising. He goes, "Well, I bought some Shibu. I want to buy some Dogecoin. I want to buy Bitcoin. I want to buy Ethereum." Right? Every single one of those products was some sort of a cryptocurrency. Right. And what that immediately kind of told me was that every generation has their kind of market or their mindset when it comes to a product that they're looking to invest in. And it was really telling that all 5 were a cryptocurrency. And it also made me realize, like, for example, with Admirals, we need to make sure that when we're talking to our global customer base, that we're offering a wide array of products and entrance into different types of markets, whatever the risk profile may be, so that we can give those beginners or those intermediate or advanced traders access to those markets. And also, this doesn't necessarily mean just because in this example, it was a 25-year-old, right, coming in his first time in his investment. But it was, it really doesn't matter whether you're 35, 55, or 65 and you're a first-time investor. For us at Admirals, we need to make sure that we have the products and services that you're interested in, that fit your risk appetite, and give you that education around that and that customer experience. And also in your language, of course, because again, we're seeing more on a global scale. So there's very interesting insight.
Yeah, I think that's fascinating. I mean, you're right. There's such a, people don't think about the markets this way, but it's almost much more in the sway of fashion than the actual fashion industry, which tends to be like have cycles of retro, whereas the market is sort of ever evolving and like ever current. I think it's interesting when we look at our customers here at Stash, who often Stash is the first place they've ever invested. 75% of our new customers choose what we call as our smart portfolio, which is the managed portfolio, where we're selecting on their behalf and managing that portfolio based on their risk profile and a few other factors. And it's a way for people who are starting to build their, like, know that they want to get started, but don't yet have the confidence, maybe as your son's hockey coach did, Daniel, to call out 5 individual things they wanted to invest in. But it's a great way for people to get started, see how the market works, but also then buy incrementally on top of that as they want. But it's part of kind of what we preach here is the least sexy thing possible is normally the best outcomes, which is a small amount of money invested consistently over time in a diverse portfolio that you buy and hold is actually the way to achieve economic security. It's just not as cool in chat rooms.
So maybe just to pick up on that, it sounds like there's a right way to at least begin investing. There's
a stash way. Okay. This is the way that we think works. Like, I think the most important thing for people to think about as they start investing is that actually just to start. Many people, I think, suffer from kind of either the belief they don't have enough money to get started. I know Daniel talked about, this example. He only had a couple of $100 as coach. Many of our investors, most of our investors, in fact, start by bringing less than $50 onto the platform, but they grow it over time with small amounts because many people, and I'll speak to the stats here in the US, 63% of Americans live paycheck to paycheck, and less than half have more than $500 in savings. Wow. It's really important to know that access to the equity markets is the single greatest source of wealth creation in the US in the last 50 years. And so sitting on the sidelines is actually not the way to build economic security, but you have to do it in a way that is manageable for you.
Got you.
I think I'll add on that from the beginner point of view. Look, I wish there was a bright story for the hockey coach, but obviously 2 years ago he bought all this, and we all know, or maybe most of us know, what happened in the crypto markets for the last couple of years, although there's a bit of a slight rebound. But you know what? The way I look at that is you just got to get in the game, right? You just got to get your feet wet. And look, if you end up taking some losses, call it your tuition, right? This is just your experience, getting to understand what it is, what worked for you, what didn't work for you, what product you like trading. Did it feel good? Did it feel not? Call it your tuition. That's all. And if you can look at it from that objective point of view, but don't give up, right? As Liza said, certain markets, they're very cyclical. They can come around, whether it's real estate, whether it's pharmaceuticals, whether it's crypto, whether it's blue chip stocks. It's very, very cyclical. And the really key is kind of to buy and hold. Now, I remember when I was much younger, I was always saying I really want to be rich and I want to have a portfolio and all this. And every really wealthy person I met, I would ask them, well, how did you get there? And most of them told me at that time was real estate. Just I bought some real estate and I just held on to it. But I kind of took that same thought process and saying, look, if I can find a good, solid company or some sort of cyclical product, maybe it's in commodities, maybe it's oil, maybe it's if I can find a pattern or something and just hold on to it, not in the in and out, where you're subject to wild swings, over the long term, you will end up making out. And as we saw in the last 50 years, pretty much almost every market has given up some sort of kind of return. Even crypto today, if you had purchased from the earlier days, say, even prior to 2018, you're making money again, right? So a lot of pain in there, but again, you shouldn't be looking at it from a short-term perspective, right? Unless you're an older investor, right? And then you need to probably look at more wealth protection. And I think some of the products where I think Liza mentioned she's got some wealth investment products, or some maybe you can expand on that for people who can follow, or some sort of copy trading or something like this would be better. But for the younger people, just put $20 a week, or don't get that coffee that week, and put that into your investment, and you'll be amazed in 10 years what that could possibly look like.
Yeah, I've always thought it would be great that if they don't do this in the US, and I'm not sure in other countries, if someplace in elementary or high school, they taught people the magic of compounding interest and the beauty of dollar cost averaging. Because the truth is, if you just can tuck a little bit away, whether it's in the market or in real estate, consistently over time, like the beauty of that compounding, the gift you give yourself by starting in your 20s, 30s, 40s, 50s, it is never too late to start, but the magic of that compound over the years is really the unlock of economic security. And I think most people have this fear of the dark about getting started because they think they don't understand how to do it, or they don't think they have enough money. And the truth is that sitting on the sidelines is actually the worst penalty you can give yourself.
Yeah, I think.
What is it saying? Money makes money, right? So if you put it in your mattress, it's not going to do anything. But if you invest it properly and for the long term, you should be okay.
Yeah, I think compound interest probably has a branding problem. If you called it the cheat code for life, it'd probably do better than calling it compound interest.
I mean, I think you should trademark that, Carl.
Oh, we've broadcasted it to thousands upon thousands, so it's out there. But 5:21 UK time. Note it. Guys, we're going to get into Q&A soon, so please put your questions into the chat. And I'm going to ask one more question before I start turning to your questions in the chat. I just want to pick up on something you said earlier, Daniel, when you talked about, I'm going to pick on your poor hockey coach again. You said, he's a 25-year-old guy, so he went straight to crypto. But you also said that, it doesn't matter whether someone's 25, 35, 65, you just need to have whatever it is they're looking for. So, from our perspective, it feels to me that content, or the kinds of content somebody's consuming, is a better indication of the action or, what they're likely to do than purely their demographic. So I guess first question to put out there is that a fair statement, or do you agree with that observation? And secondly, in any case, what is your approach to content, especially for beginner investors? Because I guess the context here is, if you say, hey, I'm just going to teach you some stuff, that's a good way to get people to leave your platform. So how do you get people smarter without, how do you get people to eat their vegetables without putting a carrot on the plate, so to speak?
That's probably the multi-billion-dollar question. 5 years ago, I would have said $1 million question, but it's probably the billion-dollar question today. Look, we try to put as much education in front of our investors, but you can't lead a horse to drink, right? So, the people need to want to learn. Most people will just want the quick buck, the quick feel. It's almost like gambling in some instance to a lot of people. This is why we try to offer more investment strategic approaches to investing. Being with them step by step, if possible. The guidance is there. There's a lot of platforms out there that can offer things like copy trading, where you don't even have to do anything. You can copy another trader that you see their results. You can also do it through an asset manager or a PAM or a MAM. In our case, outside in Europe. So it's very difficult, but it's really about inside our mobile app, right alongside where you can trade. There's lots of alerts, news, short of recommendations, obviously, but there's a lot of things around which products and things that you're interested in. So, for example, if a customer might be trading oil, we can send them alerts when oil makes a move or something happens within the oil realm, right? Or if they're interested in a particular stock like Disney, we can send them alerts that they're going to come out with their quarterly report, or the stock has fallen by a certain percentage or risen by a certain percentage. So it's trying to give as much information as you can. And some of that education is now disguised not as education, like, hey, read this or study this, or how does the stop loss work or whatever. It's more around just information. and that information could be, Disney Parks has now got the biggest record on of customers coming this summer or something like this, and that alone is information to say, well, maybe they're going to actually do really well, and that's an idea. If I was thinking about buying Disney, maybe that's a better reason to buy Disney than just randomly picking out to buy it, right?
Yep.
So I think education is being a little bit distributed now differently through the power of information, and especially with the power of everything in your hand, palm of your hand now, rather than just your traditional education pieces.
Yeah, I would just build on that. I agree with everything Daniel said. I think, and Carl, I absolutely agree with your premise. There's nothing that's like more of a buzzkill for people to say, like, let me educate you.
Yeah.
But the approach we've taken here at Stash, recognizing that people want to learn and grow like more savvy and informed and confident, but they don't want to feel like they are being taught. And so the approach we have taken there has a number of aspects, but I would say critical are three things in this approach. One, we help people learn by doing. So we build in structural elements to the product. So as an example, we have limited the number of trading windows per day. Why? Because we actually don't think active day trading produces great results. And we explain that when you are going to engage in a trade. Two, we create the content in a way that is usable, almost like in a listicle format in some instances. So an example of that, we just launched the Stash 100 earlier in November, which is divided into different sections on like budgeting or how to handle the holidays that are just practical things that you can do, but in a very like snackable format. And three, we try and bring sort of the world around you into your sort of investing mindset. So an example of that is if you have a bank account with us on the platform connected to your investing, we issue a debit card. And on that debit card, we have our patented stock back rewards program, which allows you, when you swipe your card, to earn fractional shares at almost any public company which you shop. And then we provide you context on this. So it's a great, Daniel referenced this, great example. I was thinking if that hockey coach had talked about a brand of hockey stick that was manufactured by a public company, right? So if you are shopping at Walmart here and swipe your card, you get 1% back in your fractional shares of Walmart. But we also then give you information about Walmart so you understand the connection between how you're spending your money and then that stock that's going into your portfolio.
Fantastic.
There's a couple of questions, and there's some European ones. Would you mind if I answered that real quick for them?
Yeah. If do you want to read them out as well, just so everyone?
For the audience, it says, "Does being a U.S. national living somewhere else in the world, like the U.K., which is where I live, make it more difficult to invest in the U.S. markets, assuming I have internet access and the funds to do so?" So, look, I'm a U.S. person, and actually I have a U.K. citizenship too. But I live in the U.K., and you can certainly have your typical U.S. accounts while still living in the U.K. So that's not an issue. But also some brokers in the U.K. do allow U.S. citizens to on board, and the way you would be trading U.S. stocks in that instance is usually through a CFD, or in the UK's case, through a spread betting type platform that would allow you to access Apple or Google or any of those American types of shares, as well as global shares. Maybe Liza, you can mention it from your side, because I'm sure you have some non-U.S. residents as well.
Actually, we do not. We
residents living overseas.
You can have U.S. residents living overseas, although there's some limitations to what countries they can be living in and access the platform.
Can our guy from the UK here join your platform?
No, he cannot. Sadly for us, we have a lean but mean engineering team.
U.S. markets.
I know. I love all of our regulators, since I'm sure they're listening right now, but they do not allow that. We actually have a small development team in the UK who we love, and they're great, but they also cannot use our platform.
We could have another another hour on the fun of compliance.
Yes, we could.
But
here's another
I'm
question.
afraid we are coming up on time, unfortunately.
We have a time.
So
Okay.
there's just time for me to thank our fantastic guests, Liza and Daniel, to thank Admirals for being our session sponsor, and to thank all of you for tuning in. Daniel, if there was a question you wanted to answer, maybe if you just offline, we can sync up and we can get an answer over to the questioner.
If you in here, I'd be more than happy to stick around and answer them.
Cool. So next up, we've got a short 15-minute break before the next session, which you will not want to miss. It's Stocks, Bonds or Cash, Where to Invest Right Now, featuring Ruffer's Investment Director and RBC Bruin Dolphins Head of Market Analysis. Once again, in the words of Kojo Funds, tell a friend to tell a friend, because they won't want to miss it either. And see you back here at 5:45 p.m. UK time. Thank you, everyone.
Thanks, Carl.